Yeah, because
Yeah, just get it. I do this.
wow.
I would now request Ghab sir to sing the Jai Hind Pratna for us.
I will request everyone to please rise for okay. हे प्रभु तुम्हारी करे प्रार्थना, हे प्रभु तुम्हारी करे प्रार्थना, जय हिंद परिवार की स्वीकारे वंदना, जय हिंद परिवार की स्वीकारे वंदना। हे प्रभु तुम्हारी करे प्रार्थना, हे प्रभु तुम्हारी करे प्रार्थना, जय हिंद परिवार की स्वीकारे वंदना, जय हिंद परिवार की स्वीकारे वंदना। चाह हमें ऊंची दे, राह हमें सच्ची दे, चाह हमें ऊंची दे, राह हमें सच्ची दे, तन में मन में तू भक्ति दे, तन में तू शक्ति दे, पाप पीड़ा संकट से मुक्ति दिलाना, पाप पीड़ा संकट से मुक्ति दिलाना, जय हिंद परिवार की स्वीकारे वंदना, जय हिंद परिवार की स्वीकारे वंदना। सुख शांति धन प्राप्ति कृपा तेरी ऐसी रहे, सुख शांति धन प्राप्ति कृपा तेरी ऐसी रहे, स्वस्थ सफल जीवन मिले, शुभ आशीष सदा रहे, पूर्ण हो हमारी ये मनोकामना, पूर्ण हो हमारी ये मनोकामना, जय हिंद परिवार की स्वीकारे वंदना, जय हिंद परिवार की स्वीकारे वंदना। हे प्रभु तुम्हारी करे प्रार्थना, हे प्रभु तुम्हारी करे प्रार्थना, जय हिंद परिवार की स्वीकारे वंदना, जय हिंद परिवार की स्वीकारे वंदना। Friends, Garantara sir may be little surprised. This was composed by me after I joined this college 2-3 years later, and for which our earlier principal, Kirti Narayan madam, had motivated, and this was placed left and right of our national anthem in the main near the left. So even Diwali sir also. So it is because we wanted that other institutions, our university has got anthem and pratana, we should have. So it is now there, and we have been reciting it. Thank you very much.
I would now like to call upon our Vice Principal and Professor, Ms. Reshma Ma'am, to give the welcome address.
Good morning, everyone. I would like to start with a quote by Narayan Murthy. Nobody is bothered about an institution more than its alumni. And that's the reason we are here today. Good morning to a wonderful audience over here, to my faculty members, to the panelists. We are celebrating here 75 years of Hind College, and this is first of its kind of alumni made for accountancy department. So we have to carry out the legacy of Hind College, which it is having from last 75 years. It's one of the best and sought out colleges among all in students as well as for the faculty. I welcome each one of you to this program. You have given us your time from a very busy schedule. Some people may not have gone for the weekend. It's Saturday that we have called you here, but I hope you will enjoy this and you will remember this for a long time. So on behalf of Principal Sir, Hind College, on behalf of Accountancy Department, and all my co-committee members, I welcome each one of you wholeheartedly. Thank you so much.
I now call my fellow co-member, Parth, to introduce the guest speakers for the day.
Good morning, one and all. So the first panelist that we have here is CA Vikas Vishwasram, who has graduated from Hind College in March 1999 and has further pursued and completed his CA in May 2007. He has a firm and is doing his individual practice and the area of practice of specialization being audit and taxation. Welcome, sir. So the second panelist whom we have here, yeah. The second panelist who we have here is CA Ashish Jain, who has graduated from Hind College in 2011 and has passed his CA exams in 2009 and is working as a senior manager with taxation with Godavari Biorefineries Limited, and his area of practice is direct taxation. The third panelist whom we have here is third panelist whom we have here is CA Tanveer Kerawala and has also graduated from Hind College in 2011 and has cleared his CA exams in 2018. Is a proprietor at Tanveer RC and Associates and senior manager at Bootwala and Company and has area of practice in audit and taxation. Welcome.
I would now like to request our chairperson of the Accountancy Association, CA Santosh Ghag sir, and the moderator for today to please start with the panel discussion.
Thank you very much, Diksha. And first, we have prayed to the God, and for us, who is our God? For me, Ganesh sir, can you please rise? He was HOD when before I joined, rather. So senior most Guru ke Guru hamare hai. So we bow before you, sir. Thank you. Thank you.
Don't say the word to my ear.
And in fact, before we start with the discussion, Rishma Madam and Diksha has already told that after 2 years we are having this face to face. Otherwise, we are on the Facebook or somewhere. Now we are face to face after 2 years, and people are so excited. Lots of things. You may be thinking that this room is too small for such a big event. Yes, we all agree. But we tell you secrets that we are not getting any room because economics is going on, and more than that, it's not because of economics. It is because the renovation that is being happening right now. So entire college, both the buildings are in mess because of that. Of course, before it is for good only. After a few months, this building, both the buildings will look good, but till that time, you have to pair it up. And this program was almost cancelled. You can say not cancelled, but it is postponed. But I know once cancelled, once postponed, sometimes get cancelled. Pratishtha Madam last year had a very good event, but we postponed it. Finally, never happened. At least now it may happen. But I'll tell you, students and the faculty, they were told that we will have it, whatever comes. But we are going to have this event. We had it. Then online, then postponement, but nothing. We are going to have this program now only, and somehow we could manage this room. Principal sir is not in town. That's why he's not here, but he supported us. Many other people here sitting. Some people here sitting. DMM people, the auditorium people. They are all helping us. You may be thinking only 50 students are here or 50 participants here, but I think you all know that some 300 plus participants are already there online, already logged in. We are having YouTube, streaming. So it's not that the people who are here are only the people who are participating. Many people are here, but here we have only called for the faculty. Some faculty will still join. Faculties who left the service but not join college family. Okay, so they will be still here, and some people will be still joining. And the alumni student, welcome back to your home. And once Hind that, always Hind. Okay, so now I will also be retiring within few days, but I will be still part of Hind College family. So you also, this is an moment, this is an occasion, as Reshma Madam said, that after 2 years, we are having any program visit physical, face to face. So we are all excited. Yes, you're also there. So now, of course, this is just a beginning. Possibly within a few months, we'll be having a better program. But anyway, we enjoyed, and we will be having panel discussion. Now, time is short. That's what we are doing. All three people, you have seen the introduction. They are great people, and they are still Hind. The one thing is common. All three are CA. All three are practicing. Of course, Ashish sir is in the company, but sort of practice only. And they are having roaring practice. And they are here. Actually, I should thank them. Very short notice. 30th September is around the corner. And in September, no chartered accountant will like to go anywhere other than their practice. And they are still here. And why they are here is only because of Hind factor. Okay, so thanks to you. And they have got a lot to do, lot to tell. But we have got only 45 minutes with us. That is what is allotted to us for our session. So we will stick to that timing. But at the same time, lots of things are there which they will like to share. You like to get it from them. Rather, there are lots of things that will come from your side. Not because you're on the other side. They know better. They definitely know their knowledge I have been because we have been sharing. Vikas sir, he is a part of Shivaji Park Study Circle, where I'm also a member. So we are interacting. Tanvir sir, though, is a faculty in MCOM, Hind College. So we know his expertise. And Ashish Jain sir is in a very big company. So in fact, the things that he was giving, I said, sir, you have to come down because we are talking to students who are only BCom or even below that. So we have to simplify ourselves and all those things. But what they will be talking only will be tip of iceberg. Lots of things they have to offer, but we can offer. Anyway, all the best. Our India celebrated or still celebrating Azadi Ka Amrit Mahotsav. We are celebrating our Sthapana Ka Amrit Mahotsav, Hind College, right? So thanks to TM Advani sir and everyone, right up to Wadia sir, all the faculty, all students, all parents, the Hind family. Salute to Hind family. Okay, so now we'll start with our discussion. Our area, we could have gone for anything, accountancy, taxation, costing, and any auditing or anything. But then we have zeroized. We have given a choice to the students. Rishma Madam and team, Reshma Madam, Fatima Madam, Prachi Madam, Pratishta Madam, and all of you, core committees people, I really hats off because the way you people are working. In fact, very frankly, I was saying we should postpone, but looking at your enthusiasm and the way you're excited, I said, Chalo, we'll go ahead. That's why we are going with that. So the program is happening. Now, we have only zeroed on one. As I said, we had given option to you which topic we should have. So the topic which was most favored was old regime and new regime comparison between the two. That means old slab and new slab. That topic we are going to take. Very important topic because many people are confused with it. After 2-3 years of being into the industry, or you can say in that taxation, many people are still confused. Small thing though, but there are lots of facets in it, so that people are confused. So in fact, we could have got 3 ways, like they talk individually and then I ask the question to the moderator and then your questions will follow. But time is short. That's why we'll straight go into the question from my side to each of them. We'll take one area. Vikas sir will go for the overall and basics of the old regime and new regime. Then individual taxation, which everybody is concerned, Tanvir sir will go for. And summing up and corporate taxation, Ashish Jain sir will go for. Correct? So that's what division, so that there will be no overlapping. And at the same time, nothing will be left out. Of course, there will be still too many things left out because in half an hour or 45 minutes, we cannot expect everything to be covered. CS students are already here. So what I have done, I have jotted down some questions on your behalf. Whatever questions you will be having in your mind, I have jotted down. Of course, some question will be till there, you will be asking it directly. But I have jotted down the, you can say representative questions, which I will be asking to each of them. And then the next and the next. And finally, we'll sum it up. And then the house will be thrown open for discussion from here. Okay. So with your permission, I'll take the chair. So these are my questions. Very short questions. I'll keep simple. We will keep simple. And one thing, these are not speakers. These are not regular speakers, but they are doing extremely well in industry in their practice. I know about it. I personally know each of them, and that's why they are here. We are not looking at the oration, but they have their experience and expertise that we are trying to share over here. Okay. So questions. First question, of course, the first part of it will go to CA Vikas Vishwasram. And it, as I told, it will be overall and it will be basic thing. So first question from my side. When was this provision, old regime, new regime, or old slab, new slab? But before that, I'll tell you one thing, that we should not confuse one thing with this old regime and new regime. Is that there is already a provision where if you have got income up to 5 lakh or less than 5 lakh, then you don't have to pay any tax. Of course, you may have to file the return, but you don't have to pay the tax. You have to file the return for claiming the deductions or exemptions. But otherwise, you don't have to pay the tax if your income is 5 lakh or below. Even if it is more than 5 lakh, but suppose it is your net total income is coming below 5 lakh, again you don't have to pay the tax, although you have to file the return. Am I right? So please correct me if I am wrong. Okay. So, but this is different. It has got nothing to do with this old regime and new regime. Correct? So we are focusing only on old regime and new regime. Okay. So the first question, when was this provision first introduced?
The Finance Act 2020, our then Finance Minister, of course, she is now also Finance Minister, Sitaraman Madam Ji, she has introduced this concept of new tax regime. And when she has introduced, we all are concerned with the individual, but she has introduced for the corporate as well as non-corporate SEC. So there are 5 sections. One section 115 BA was already there. It was amended. And then there are 4 other sections for domestic company. Then one is for the manufacturing company. Third one is for the individual SECs and HUF. And the 4th one is for the cooperative societies. So those new sections were inserted by the Finance Act 2020, applicable for the assessment year 2021 onwards. So that was the first time this old tax regime, new tax regime were introduced for the corporate and the non-corporate SEC. And there are certain conditions, then there are certain exemptions, deductions which you have to forego. And on that basis, it started from that non-corporate, corporate, and old tax regime and new tax. So it was starting from 2021.
But before that, there was some ordinance, I think, in 2019.
1919, there was an ordinance by way of 115 BA. There was only one section which was there. That ordinance, after that, that section was amended. Earlier, there was only one section, 115 BA, that was for domestic companies. That they have changes to the manufacturing company. Then there's a new section by way of Finance Act 2020. There's a new manufacturing company. So one section which stays, there's a tax slab for the existing manufacturing company, and there is a new section which is for the new manufacturing company. So all these are changes. This has been made. Then there is a domestic company. Then there is an individual and HUF. It's only individual and HUF, no partnership, no LLPs. And then there is a cooperative societies. There's also new tax structure for the cooperative societies if they forego certain deductions and exemptions. When there is no separate tax exemption or tax slab for the AOP, BOI, or LLP or partnership firms. So it still carries with their old tax structure.
Thank you. Now, what do you think, the next one, what do you think must be the object by bringing in this provision?
Yeah, object was very simple. Right now, if you see the tax rate of the highest tax rate, which is paid under which legal status is partnership firm and LLP. Those are having 30% tax rate. Before that, you must have known, whoever was thinking of starting a business, those people were going for the partnership firm or the LLPs, because tax rate was earlier 30% for all, for the domestic companies also and for the LLP. But people were going for partnership firm because there were lesser formalities as compared to companies. So there were hardly any domestic company, private limited companies, the people are coming up. So to just give the boost to the economy by way of investment in private limited companies, because if you start a private limited company, obviously there will be income generation, there will be employment opportunities, and there is a boost in the economy. So why one will go for the private limited company if you're going to start a new business, unless and until there is some concession for the statutory payment, some deduction, some exemption. Anyways, you're paying tax at 30%. Here also in partnership firm, you're paying a tax at 30% with lesser compliances. In company, you have a lot of compliances of register of companies. Still, you are paying 30% tax. So who will go for that company formation? So just to give the boost to the economy by way of formation of new companies, domestic companies, this tax structure has been revised. Now the revised tax rate like 15%, 22%. So anyone can think, like, if you want to pay 30, why would one go at least at the start of his business to pay 30% tax? He will obviously go for 15% or 22% tax. So that is the main area why this clause and the tax regime, entire tax regime was introduced. Even if you think of individual tax structure, there was a lot of say, or there was a lot of demand from the public that they should increase the basic exemption limit of 2.5 lakhs to 5 lakh rupees. Obviously, government is not.
In fact, that was actually people were, the great one was saying the threshold limit itself will be raised from 2.5 to 3, rather 5, but it never happened before. What was given was something different, and it was limited and conditioned.
Yeah, I agree. So that was the demand of that time, that government should increase the limit from 2.5 to 5 or 3 or maybe something. But government is not going to do that because there is a lot of loss on the taxation issue. So that's why they come up with a new tax regime for the individual assessees also. So those who are not having any investment, those who are not having any deductions, exemption, they can go for that and they can save their taxes. Correct. So that is the whole idea behind this actually.
And in addition to that, the government was saying you are saying threshold limit has to go to 5 plus 5 lakh, but they say we have already got that provision where if you have got income up to 5 lakh, then we are anyway not taxing. So that was taken here. That's what they said. And now Vikas sir is saying boost to the giving boost to the economy. Now how important it is now, you must be knowing from Vedanta, Fox, and all those things. So in having industry in your country or in your state, how it matters. So this was one of the reasons why this provision was brought back or brought in rather. Thank you very much. Which type of taxpayers or assessees are covered under the scheme? So in fact, we have said that, but
as I said, this is applicable to the domestic companies. So one clear, this is not applicable to foreign company. Then they specifically say it's a domestic company. Then individual and HUF. So no LLPs and partnership firms. And then there's a cooperative society. So there are a lot of 3-4 sections which perform the provisions for the new tax regime for domestic company, individual and HUF, and cooperative societies. All others will have their existing structure going on.
HUF, of course, TY people know or beyond, but HUF means Hindu Autonomous Family. AOP means Associated Person.
Association of
Persons. AOP. And BOI means Body of Activity. So people below.
Sorry, that we are used to use those abbreviations.
Yeah, we are used to it. Okay, thank you very much. Now, is there any lock-in for this scheme?
Of course, there is a lock-in. Means individually, I think my colleague will share that. But then lock-in is like once you go in that particular section or one in that regime, then you cannot come out of it. You cannot
Exit route, whether it is there or not.
And then, if at all, exit is possible only by way of non-compliance of certain conditions which has been allotted. Like this new tax regime has been allotted with certain conditions. And in future, if you don't fulfill those conditions, then obviously will come out of that automatically. And then again, there is no entry in future. So whenever you are going for any new structure, new tax regime, you have to be very careful. Like, of course, means individually they will share, but as an individual or HUF, there is an option given if you don't have a business income. But then for others, they have to be very careful. They have to check the whole future background, what will happen if I come out, or there may be some conditions which will force you to come out of this tax regime. Then what will happen? So all these need to be taken care whenever you are going forward to this new tax regime.
I think it is similar to when we are allowed capital gain exemption deduction. If you do not comply, you have to buy house within certain time. If you do not, then what tax have you say will be withdrawn type of. Now, similar question now. Can this option be withdrawn?
See, you cannot withdraw the option. That's why I said there is no amendment. There is no provision in the act which says you can withdraw this. You cannot withdraw this. But you can come out of this by way of non-compliance of certain conditions. So you on yourself, you cannot do that. Last year you filed with this exemption, this new tax regime. This year filing with some different tax regime. You cannot do that. Only way you can do that by non-compliant of certain conditions which has been allotted on the basis of which the new tax regime has been given to you. So it's actually not withdrawn, but you will automatically come out of that, which is then there is no further entry to that new tax regime.
Okay. Now, in fact, I got one more question, but time I think is if we will go with the time. If more time is allowed with possible, then I'll go for one extra question which I'll keep pending. So now, thanks to CA Vikas.
Thank you.
Now we come to Tanvir sir, CA Tanvir Kerawala.
Good morning, or more likely good afternoon.
Right, good.
I'm going to speak about basically the part where if you are an individual or HUF, so what is this new scheme which is applicable to your end? If you are a normal individual like you and me, so am I audible to everybody?
Yeah.
Yes. So the basic premise here is if you are an individual or a Hindu undivided family, so should you opt for the new scheme or should you stay and continue in the old scheme? And that's basically my topic of discussion here. So I think I will go on to questions.
Yeah. So first question, simple questions we are putting because we know the audience. Can a taxpayer switch over from old to new and vice versa?
See this question I will answer in two parts. I need about 2 minutes of your time for this because this requires a detailed analysis. See, there are two kinds of people here. One is a person who is not earning any business or profession, and the other is the person who is earning business or profession. Right. So first we'll discuss the first category. So a person who doesn't have any income from business or profession, like a salaried person or a rental income person, he has an option to opt every year for the old scheme or the new scheme. Right? He can opt every year, and there is no formality for it. Just have to file the return of income, and there he has to declare that he is opting for the old scheme or new scheme. No restrictions. You can go back and forth every year. But if you are a person who is earning income from business or profession, right, then there's a catch there, because once you can opt for the new scheme, right? It's open now. So if you are earning business or profession, then you can opt for the new scheme by filing a form. I think it's 10IE form, It's a very simple form. We have filled it dozens of times. It's very simple. Just your name, address, and basic details. So it's not a task to fill the form. If you fill the form, you go in for the new scheme, right? But then once you opt for the new scheme and you are earning income from business and profession, then you have to continue opting for the new scheme in subsequent years as well. If you want to withdraw, right? If you want to withdraw, then you have a one-time option to switch back, right? You can switch back to the old scheme. But once you switch back to the old scheme, you can never go back to the new scheme. At least for now, there is no amendment of a second window to go for the new scheme. So if you are in business or profession, think carefully before switching in, because once you switch in, you have only one option to switch back. Otherwise, you have to continue with the new scheme. So that's I think that answers the.
Yeah, correct. That means by old scheme is by default and new scheme you have to opt.
Yes,
As he said correctly, it's very simple, that form, because most of the forms are templated. So if the template is given, just you have to file the details, which are also mostly available.
Ready-made form.
Okay. Now, my second question is, I think already answered by you. If a taxpayer has income from business and profession, then can he switch over between the regimes?
I think that that's the same.
Unless you want to add to it. Okay, we'll go to the next one. Can a taxpayer choose to file a return with a new tax regime if it has opted for tedious deduction by his employer?
So this is a more relevant question. Like people who are salaried people, like I know this is a question which is frequently asked to me. Because see, my area of taxation is basically audit and taxation only, and we don't have corporate clients. We have individual HNIs, partnership firms, private limited companies, right? So this is a question which is very randomly asked and very frequently asked. Okay, I have told my employer that I am going under new scheme, and he is deducting TDS under new scheme only. So can I switch back to old scheme while filing my return of income? Right? इसमें क्या होता है कि at the beginning of the year, right? You have to give a declaration to the employer if you are a salaried person, okay, whether you are opting for the new scheme or old scheme. Because based on your declaration, he will deduct TDS. He will calculate the TDS and deduct it. So over the year, he will keep on deducting TDS based on your declaration, okay, you are going for old scheme or new scheme. Now you can't change this option during the year. Once you have given the declaration to the employer, you can't change it. Otherwise, you have to compute everything again. So after the year is over and you want to file your return of income, at that point of time, you're not tied down by that declaration. You can opt for old or new at the time of filing return of income. If old is beneficial to you, go for old. If new is beneficial, go for new. That intimation to employer has no connection whatsoever with your filing of return of income. Right? I hope that's very clear. Right? So don't get confused. कि employer को मैंने बोल दिया हो तो क्या होगा? बोल दिया. But at the time of filing return of income, you can opt for new or old because you are a salaried person, not business and profession. You have option every year, right?
Thank you. Now, which are the deductions and exemptions not available, but is not covered under the new regime? This is another important question.
Now, see, this is the part where you can say it's a drawback of the new scheme, right? अभी तक तो सब अच्छा लग रहा था कि it's simple, low.
So it's not an unmissed blessings.
There's a catch everywhere. So if you opt for the new scheme, you have lower rates of tax. You have simplified form, less hassles for documentation. All that is good, but something goes away, right? For example, for an individual, as many as 70 exemptions and deductions are taken away from you if you are opting for the new scheme. 70, right? Obviously, all 70 will not be applicable to everybody, but kuch na kuch sabko applicable hota hi hai. Like, for example, the rent you pay, you get a HRA exemption, that goes away. The interest on housing loan which you pay for self-occupied property, that goes away. Chapter 6 deductions like ATC, ATD, life insurance premium, PPF, term deposit with banks, etc., all those go away. So there are many of exemption deductions, as I said, 70 exemption deductions which go away if you opt for the new scheme, right? So majority of them are, the most common ones are, as I said, interest on housing loan for self-occupied property, standard deduction for salary of 50,000 rupees which you get for salary. That is the second one. The third one are chapter 6A deductions like ATC, ATD, ATDA. If I interpret it, ATG donations, life insurance premium, 5-year term deposit with banks, Sukanya Samriddhi scheme, right? Payment of principal amount of housing loan, payment of interest on education loan, right? All these exemptions will go away. So common things will go away. So if you have an investment plan in place where you're already paying EMIs and SIPs, right, and you are paying tuition fees, you are taking LIC and medical every year, then I would suggest you stick to the old scheme, because that entire plan of yours, that what you have made, financial planning, will all go down the drain if you offer the new scheme. So that's the catch in the new scheme.
This is very important. Actually, practically, like all will agree, Garantra sir also. What we do as chartered accountants when we file the return, post facto and also pre facto, like tax planning. हम लोग क्या करते हैं? We calculate the tax as per this and as per this, and whichever is more beneficial, then we go for. So when is the tax planning, we estimate the income, project the income. So what is the income, different sources? Then as if I am going for old regime, calculate the tax, income and tax. Then new regime, and then whichever is beneficial, we go for it. So tomorrow you don't have to repent down. Correct, na, sir? You all will agree. Now there are two questions, but I'll take only one because time I should look into. Now senior citizens. Now now you have to tell me tell us what is senior citizen, because for railways different age, for ST different age, and for income tax different. Again, income tax there are two, senior and super. So I'm asking. Do the senior or super senior citizens have higher basic exemption under the new regime?
First, I would like to answer, okay, what is a senior citizen basically, right? See, senior citizen under income tax means a person who is first of all a resident in India, that he should be a resident in India as per the income tax law, and he should be at least 60 years of age. And same condition for super senior, at least 80 years of age and resident of India. So the point to note here is that if you are a non-resident, you can never be a senior citizen. I mean, under income tax, practically you can be, right? But under income tax, you can never be a senior citizen if you are a non-resident of India. So first of all, senior and super senior, 60 plus, 80 plus, resident, right? So now if these people under old regime, the senior citizen had a basic exemption limit of 3 lakh rupees, and the super senior had a basic exemption limit of 5 lakh rupees. But this higher basic exemption limit is sadly not available for the new scheme. All of them, all individuals, irrespective of age and gender, they have a basic exemption limit of 2.5 lakhs only. So there's no higher basic exemption limit for senior and super senior under the new scheme. Right? That's clear.
That means if you are going for old regime, then you get that 50,000 cushion for senior. That also is gone.
And 2.5 lakhs for super senior.
Now, one reserved question, but I'll ask with time permits. So now, thank you very much, CA Kerawala sir. Now we go to Ashish Jain sir, CA Ashish Jain. Thanks to Ashok Jain sir. He is common friend of yours and mine. Ashok Jain is a person who was my HOD in SLDT before I joined Jain College. Thanks to him, he is still the mentor of mine. And he was the article clerk in Ashok Jain sir's office, I think 15 years before. And yeah, so he has, thanks to him, that he's connected back to Jain College. So now, Ashish Jain. What are the provisions under section 115BAA? Of course, he's going to take corporate assessment, company assessment. 115BA regarding the domestic company.
Good afternoon. There was an amendment made by way of Taxation Amendment Ordinance 2019, in which the taxation rates have been reduced for the domestic companies. So this section was introduced, 115BAA and 115BAA and 115BAD. So under this provision, you have to pay tax at the rate of 25.17% as against the earlier taxation rate, which was as far as 34%. So on an income of, say, you are having an income of rupees 1 crore. Initially, you were paying a tax of 34 lakhs. Now you have to pay 25 lakhs. It is inclusive of, so basic rate is now 22% plus 10% surcharge and 4% education cess.
Now, this corporate assessment, many people will not identify. I know, at least this group. They say individual, company, but I'll tell you one thing. Our seniors say that you may not be doing everything. Like, medicals, eyes, and with in fact, from the ophthalmology, only retina. So now that's a specialization. So even in our profession, there is a specialization. So you have to specialize somewhere where people will queue in for coming to you. You may not be knowing anything else. But if that thing, you are the master and people come to you. So you maybe at least some of the people you will like to go for corporate, and you have to have that knowledge because you're a youngster. You have to have all ways open, all avenues open. That's why this thing also, although today you think it's none of my business, but it's your business. Okay, that's why we are kept this section. Otherwise, we could have gone for some other thing. Lots of things are there. Deliberately, we have kept this section, corporate assessment. Now, next is who can exercise this option?
So as we have already discussed, this section is specifically applicable to domestic companies, whereas there is a different section for individuals, HUF and the society. So this section is specifically restricted to domestic companies.
Okay, thank you. When this option can be exercised?
So basically this, as far as for individuals and HUF, there is no such option to be exercised. But in order to exercise this option, we have to file one form 10IC, and it has to be furnished at the time of before the due date for filing of return of income. So for the corporates, there are say two due dates. One is 30th November for the companies having transfer pricing applicability, and for the others, it is 31st October. So prior to filing that return, if I have to choose for the new regime, then I have to fill up form 10IC.
In fact, very frankly, my next question on that only mostly I think you have covered. What is the process for exercising the option? I think you have covered it, or you want to add to it?
So it is to be filed on the, we have to fill one form IC electronically before filing the return of income. It is a mandatory criteria.
Very good. What are the conditions to be satisfied for exercising the option?
So as we have discussed, so they have reduced the rate from 34% to 25%. So it's not a blank
Effective rate.
Effective rate. So it's not they have given it for free. They have taken away lots of exemptions and deductions. So basically this there are certain deductions which I am, as a domestic company, I am eligible to claim, and depends upon various sections are there in which I can claim these deductions. For example, that is, if my unit is in a special economic zone, then I can claim deductions under section 10AA. Or if say I am into investment link, I can claim some investment link deductions. There are say deductions related to section 33AB, tea development account, rubber development account. Then there is a section 33ABA site restoration fund. Then section 35, if I'm incurring any expenditure on this scientific research, say for example, if I'm donating to the institutions who are into the research associations, then I'm able to claim these deductions. Or if I'm having an in-house research development, then I can claim expenditure also under section 35(2)(a). So there's are deductions under specified businesses. Then there is a deduction for agricultural extension projects. Then there are deductions available for scheme development projects. So suppose if my company is claiming any of these deductions, and if I switch to the new regime, then I will not be able to claim these deductions. Also, there are chapter 6A deductions. For example, if I have given a donation to any trust or institution, so in the new regime, I was eligible to claim a deduction. But if I switch to the new scheme, then I will not be able to claim those deductions. So these deductions are covered in section chapter 6A. So there are different 80IAB, 80IAA. So those deductions also I will not be able to claim. But there are only 3 exceptions to this. If I'm in the new regime, then 3 deductions I am still able to claim. One is section 80JJAA, which is related to deduction in respect of the new employment. Suppose if there is a certain conditions to be satisfied, and if I increase the employment, that deductions I can claim. Then in last 2 years, the government has introduced IFC units. So if my unit is operating in international financial service units, then there is a deduction which is eligible to be under section 80LA that I can claim. And thirdly, section 80M. This relates to if I paid a dividend, and if I received the dividend, then I can claim a set off of that. So basically these 3 deductions are available. Otherwise, most of the deductions have been done away. So as a new company, as a company switching to the new regime, I will not be able to claim these deductions.
Thank you, Ashish, sir. Now, chapter 6A, those people are not much conversant with it. Chapter 6A means income tax is divided into section, subsection, and capital also. So, chapter 6 is a chapter where certain deductions, which we popularly know, ETC deduction is LIC, we pay like the housing principle, blah blah blah. So that is chapter 6, ATG, with donations are also. So that is chapter 6. Because it was coming in from everyone. So some people may be wondering what is this. Now I think we have completed a little faster, so I can ask one additional question. Okay. What is your take on the future of this new regime? Will it stay or it will go away? Because why I'm asking this question, because when it was brought in, as Ashish sir say very clearly and correctly, that we wanted to give boost to the economy. But at the same time, I personally feel, and many people also have been saying, there is a dispute on this. There is no unanimity on this. That one of the objects for bringing this in this provision, new regime, because see, old regime is by default, new regime is optional. So why this option was given is because people were saying, "अरे मेरा 5-7 लाख का income है, तो खाने को नहीं पैसा है तो उसमें investment कैसे करेंगे?" So what is not possible, or you are asking to give, you are giving deduction is of no use. Well, actually, don't deduct, don't have deduction, get the reduced rates of tax. So even if you are not investing, still your taxation will be less. Of course, then there is a magic figure of having 15 lakh. Normally, old regime is beneficial if you have got good amount of investment. If you don't have investment, then the new regime is benefit. And after some 15 lakh, I think it's a magic figure. It balances out, and beyond that, the old regime becomes beneficial. So for a lower income people, new regime is beneficial because they may not be investing much. And for higher income people, the old regime is beneficial because they will be able to invest. So they get the benefit of that, and they overtake in concession, I'm saying benefit for the new regime people. But after 15 lakh, it balances out. That's what people. In fact, I'm going to ask that question, and that question I'm reserving because it will come from your side. So, but now this take of yours as to what will be the future of this new regime. Will it stay or it will go away?
In my opinion, it is going to remain because the basic objective of this government is to do away with, gradually to do away with all the deductions and exemptions.
Simplify that.
Yeah, to simplify, because whenever I am claiming any deductions or exemptions, there are certain conditions to be satisfied, and it is always prone to litigation. And almost, if I am claiming, say, a deduction under Section 80I, power units, so there are certain conditions to be satisfied, and if I have not fulfilled, then deduction is not allowed. So always the revenue side, they always contend, okay, you have not fulfilled these conditions, and hence we are not going to allow you the deductions, and so it is leading to a lot of litigations. So the government is very clear; they want to do away with all the deductions. They have brought out many sunset clauses as well. So this scheme is going to remain, and now whether I need to exercise this option or not, I have to do a lot of study. Basically, say as far as domestic companies are concerned, they have to plan out, okay, in 10 years, 15 years down the line, how they are going to make the investment. Suppose like if I talk about the, say, IT companies, so they are mostly profit-making companies. They have definitely switched to the new scheme because there's been a tax saving of 10%. But if I am a manufacturing concern, so suppose if I'm planning to claim or make an investment of 1,000 crores, so there is a deduction, additional deduction available to me of depreciation, which I can claim. So at that point of time, I'll have to do a study where would I be better off. So mostly this scheme is going to be there.
In fact, one of the reasons why I asked it is because when this scheme was brought in, that was there was a slowdown. People were saying it is a recession, but it was not recession, but slowdown was there for sure. And then the pandemic came in. Then everything was haywire. So when it was brought in, slowdown was there. The finance was coming at a lesser and lesser cost. So in the case with the deposits, people were getting lesser and lesser rate of interest till today. But now we may be sensing that now the economy is little picking up. House properties are already started picking up. So is the case with the repo rate has gone up, reverse repo rate, and everything is that's signal that the economy is now picking up. So earlier, government was not needing too much of money. That's why do I force investment? You get the deduction or tax savings without the investment. But now it is possible with the higher costs of finance. Government may want the investment from the people. So possibly, of course, as I said, there will be a no one opinion, unanimity on this. There will be difference of opinion. Some people think that it will go away if at all the economy really picks up and government needs the funds back to be injected by the people, or otherwise will so. But I also personally go by what you said. But of course, it is a government's call. What will happen, we do not know. We are only analyzing the thing. Call will be taken by the government.
So that is why I think they have kept the option open for the individuals.
Correct.
Okay, you can switch every year.
Switch.
So if in some of the years you are not able to make the investment, then you can compare it and pay under the old regime.
So that means you got always an option to go back to the old regime
For individuals.
Thank you. Now there are two more questions. One for two of them. If time permits, I'll ask. Okay. Thank you very much. So now coming to, and of course, audience participants, your questions will be there. Ganatra sir will like to quiz us. We know. Because very thankful, I am humbled to be sitting here when you are there. But then we are doing our job, sir.
Yes, sir.
And you are the authority which we always respect. Now, question for Tanvir Kerawal, sir. What are the pros and cons of the new tax regime? Yeah.
Okay. So now we have to analyze what are the pros and cons of the new tax regime, right? First of all, the con is the biggest con is obviously that you are losing out on all the deductions and exemptions. That's it's very plain to all to see. Okay, you are losing out on a lot of exemptions and deductions. So we'll not talk about the cons here. Cons you already know. What are the pros? What you get of investing in the new scheme? First of all, there is a simplicity of documentation. No, nothing, not to maintain any premium receipts, any school fees receipts, any housing loan documents, nothing to take, nothing to preserve for the future, right? It's a very simplified tax structure, lower tax rate, no documentation hassles, simplified income tax return, right? That's a core advantage. Further, because you don't have to invest in any tax saving instruments under new regime, there is no compulsion. You have a more flexibility of using your own funds. You have more liquidity and flexibility. You can invest your own funds wherever you want, in shares and mutual funds, in real estate, in property, in gold and silver, or in tax saving instruments, whichever is your choice. So the biggest advantage is that you are getting a lot of freedom to invest wherever you want, instead of compulsory investing every year in tax saving instruments. So these two, I think, are the main benefits of the old scheme. For the new scheme, the flexibility of investing your funds, higher liquidity and flexibility, and second, a simplified and less hassle-free, very hassle-free documentation structure and filing process. That's the two advantages which I can see. The disadvantage, obviously, is that you will be losing a lot of exemptions and deductions. So if you have, as I told you before, if you have a financial plan in place and you have already started that journey of taking a house loan, taking an education loan, paying your children's school fees, paying LIC medical every year, paying SIPs every year, EMIs every year. So then you have to analyze between old and new. Every year you have to make a comparative analysis and evaluation. Okay, under which scheme are you saving taxes? So that you can take an informed decision whether to continue with the old one or opt for the new one. Right? I think that answers the question, sir.
Thank you. Thank you. Yeah. Now, I told you that up to a certain limit, new regime is beneficial if your if your income is less. Higher group people, higher income group people will be benefited from the old regime because they will be having savings or investment anyway. So they will, and though the advantages coming from those investment tax advantage much bigger than the tax saved in new regime. That's what I think. And 15 lakh is that magic figure. But then I request Vikas sir to please give us the comparative analysis since we have got the time. Because otherwise, this particular discussion will go on for days and days. Single section, you can say, or the other relevant one, but it will go on for a year, for a day. And we are what experts and people with us. Will be in short, please we can do that.
As rightly said by CA Tanveer, that you have to sit and do the analysis. But just with the simple calculation, if you have a net taxable income of rupees 6 lakh, okay. Now with the old tax regime, okay, if you have a net taxable income, when I say net taxable income, means your gross income minus your deductions, because you are going for the old tax regime, you will get all your deductions and exemptions. So 6 lakh rupees the net taxable income. Your tax will be 12,500 for the first slab, and then 1 lakh cut 20%, so 32,500 with the old tax regime. This is a flat tax rate.
These figures come from practice. We say percentages, but we have been already always calculating. So the figures, they are set in your mind.
So 32,500 is a tax for the old tax regime. Now, if you go for the new tax regime, okay, so 6 lakh is your income, assuming that if you are not having any investment, and then 6 lakh ka taxation is 2.5 to 5 lakh is 5%, that is 12,500. 5 to 6, that is 1 lakh, that's got 10%, that is 10%, 10,000. So 12,500 and 10,500 will give you 22,500 as against 32,500 in my old regime. So you're saving on 10,000 rupees in the new tax regime without any investment. But rightly said by Tanveer sir, if you have any committed investment plans, like you can don't make an investment of PPF, you don't make an investment of bonds, but if you have a housing loan, you can't afford to give away, that will go away. So that is, in that case,
Even LIC type of thing, because they will be
LIC
lapsed.
also, some people surrender those policies if you don't fit into their investment plans. But housing loan, school education loan, education fees of your kids, you can't give away with that. So if you have a financial plan in respect of those, then again you have to sit and calculate the analysis, and at the final, while filing the return. Good thing is government has given the option to salaried people. That means those people who are not having business income, they can switch over, as rightly pointed Siki, every year. So every year you can make your own calculation that how will be saving on this, whether this year will be a much lesser saving or a higher saving. So on and so forth. And as rightly pointed out, after a certain limit, like 15 lakhs rupees, that will be all will be at par. So this tax regime, you can say that majorly it is introduced to benefit the lower income group. That's what I feel.
Thank you very much. Ajay, can we give some this thing also? Just last question. What about the multiplier effect on this?
Multiplier effect is like, when
First of all, na multiplier economics, economics term. If you spend 1 rupee, if you instill 1 rupee in economy, it goes 10 times or whatever times. And if you take away that money, that means if you are not spending, then it goes into maybe deposits, whatever, but it's not available in economy. Then economy gets shrunk. Oh. Welcome to Jimmy sir. Yeah, please come. Yeah, how are you, Babaji? Are you sorry? Oh, sorry. I'm sorry. Mistaken identity. Yeah, Babaji. We. How are you? Well, like that. Our vice principals, BK Singh sir, Dr. Uddhav Dharekar sir, thank you very much. I just forgot. Yeah, we have not come for a longer time. Huh? Anyway, but this is an opportunity for us that we are having this. It's only for this because we are trying to reassociate ourselves, having reunion of ourselves. Yeah, your Neha Shah.
Yeah.
Neha Shah. I forgot my question and forgot the name. But that blame goes to both of us. Now we will be reunited. And yeah, my better half here. Yeah, Neha. We will have an introduction afterwards. Okay. So we will go for that last question and then we'll go for the introduction. Yeah, multiplier.
Multiplier effect, I can explain. Like, suppose if you, as I said, these new tax regime for the domestic companies have been introduced. just to give the boost to the economy, that more and more people will come out with some investment plan and and they'll form companies so that there's a tax concessional rate. Now, if you form a company, say private limited companies, you will employ some people, will give some salary. So obviously money will go out. That person will go out for his personal care. He will go to some grocery shop. So again, so money will be circulated in the market. Like if you give some concession, obviously more and more people will start investing. More and more people will come with the more domestic companies because there's a tax concessional rate. Nobody will go with the LLPs and partnership firm, even though slightly lesser compliance is there as compared to ROC. Because at least in the initial stage of your business, you need certain concessions, tax holidays till the time your business gets streamlined. So this is the way the money will start circulating in the market, and this is the more multiplier effect which sir was asking, and that is the reason. That is the reason also. This is one of the reason also why the government has introduced this tax structure, that more and more people should get attracted to this tax structure, so that more and more industries, private limited companies will come in the market. There will be a lot of employment, and then there's a money circulation will be going on.
Thank you very much. I think these were the representative question that I had compiled, identified, and then finally I asked. But then there will be lots of questions from your side. So now the house is open for questions from your side.
No questions. Okay, I'm gonna go.
Yeah.
Am I?
Yeah.
Any one of y'all can feel free to answer this. I have a very divided opinion on
Please say your name when you ask the question, so that anybody will be having introduction. But then Meda Dalal, right?
So basically, I have a very divided opinion on the loan system, or even the EMI system per se, which is whether it is meant for your car or anything of that sort. Because I believe that if I put a fixed deposit and I get an interest of say 5% on that, owing to what the rates have gone down to, I'm going to pay 7, 8, 9% as a tax on the year on the loan that I have taken. But being a person who comes from a profession from the media, and we always get paid consultancy fees, or like we say professional fees, we get a lot of benefit on expenses when we file. What would be your suggestion on this? Like, which is the right route to take? Either buy your car upfront for 6 lakhs or pay 1 lakh rupees as a down payment and use the other 5 lakhs as a EMI, which is more beneficial from the two?
Whenever I personally suggest that, again, this will go as a salary people and people with a business of income, business or profession. Like for the people with the income from business or profession, they have an option to claim certain expenses against that, which salaried people don't have. They have that normal 50,000 standard deduction. So because I have all my tax clients are asking me, हम लोग जो ये घर में खर्चा करते हैं उसका कुछ benefit नहीं मिलेगा क्या? So I said that is available in that 50,000 only. So, but as against if you are working as a contractor or a consultancy income, you can show conveyance, you can show car rent, this thing. So personally, if you're getting something as a consultancy fees, then and if you don't have the funds to block it, then it's good to go for a loan, so that interest portion which you are paying, that also will be claimed as an exemption against your business income, and so that means 20%, 30% tax will be saved on that. But if you have a salaried people and if you have a funds, then it's not worth wasting the money in repayment of interest. Of course, most of people are going for the housing loan, because housing loan you are getting the benefit. 2 lakh rupees ka benefit you are getting, balance ka it will be carried forward till the time it gets completed, plus 1.5 lakh rupees principal repayment ka you are getting the benefit, and more your properties is being made after the end of certain period. This is not the case with the motor car. Your motor car value is going to get reduced after 1 year or 2 year or 3 years. So if you have a funds, you can go for upfront payment, or if you don't have the funds or have the funds, don't want to block it with the this car or something which you are not going to get high value in the future, then you can just go for the loan and then claim the deduction for the interest and everything. That's what I feel. I think others can.
Is your question answered? Okay, so any other question? Any other question? I thought there will be lots of questions.
My fellow co-committee member would like to take the Q&A round. Siddhant?
Yeah, very good.
So, do you all think that any changes can be made to this new regime since it's only just introduced? Or is it perfect or does it need to be worked upon in certain ways?
Yeah. Ashish Jain, sir.
The main idea behind bringing this new regime, the government now is concentrating more on, say, I would say GST. So they are trying to simplify the direct tax because there are a lot of litigations blocked and a lot of revenue is being stuck. So in order to streamline that, they have brought these provisions. So in order to say, for example, if now they have raised the tax limits, suppose there is a additions been made, and if I want to go for the appeal, I can go, but they have restricted this. The department cannot go for the appeal. So they have raised the limit for ITAT appeal filing, High Court and Supreme Court. So
ITAT means Income Tax Appellate Tribunal.
So say if there is an addition and tax payable on that is 45 lakhs, then and if CIT confirms that 45 lakhs, so I can go to ITAT, but department cannot go because since it is below the monetary limits, they cannot file an appeal. So basically, I think this is the perfect way to go.
In fact, once it was said earlier that one nation, one tax. You know, when GST was brought in, one nation, one tax, and in fact, it was said by some people, maybe a grapevine, that there will be only one tax. Income tax also will go away. So we don't have to pay income tax. That's what people were. Some people were claiming, and we were thinking. But as of today, it's not coming by. But in years to come, at least it will be simplified, and GST will take the income tax will take the back seat, and GST will be overriding possible. That's what I also believe. Others can add to it.
Should I move on to the next? So CA Vikas sir. So as the saying goes, if it ain't broke, don't fix it. So do you think this applies to the old tax regime? Because introducing a new one only creates more confusion among the relatively common people who are relatively unaware about taxation policies.
It is nothing like that actually. Nowadays, though, we can't say that nobody is aware of them. Of course, these provisions are they may not be available with the technicalities of these provisions, but all the people currently are mostly aware of what is going on in the market or in the outside area. So these tax structures have been introduced just to give the additional benefit to everyone. Now, there are certain employers where the facility of guidance has been set up for tax planning for all their employees. So even though it is a little bit of confusing, I think whoever is finding it beneficial, they can go for it. And then again, for individual, there is a good thing is that every year they have a switch on and switch off option. So they can really think of that, and then they can go for it.
Thank you, sir. So CA Tanveer sir. So considering the government has introduced a whole new regime, so they are seemingly open to restructuring the tax system in a way. So do you think we're headed towards a tax system like similar to different countries like the UK, where the overall tax rate is lower?
Well, I would answer this in a way that India's tax structure is still one of the highest of the world, right? So I think their the government aim is to do away with all the complications which are involved in filing. And because the higher the number of exemptions and deductions are there, the higher the number of disputes are there, right? Okay, whether is this particular exemption or deductions available or not available, right? So if these complications are done away with and the tax rates are lowered, so I think that's the ultimate objective of going towards a more reduced tax structure of the country. But as of now, I don't think there is any probability of it happening very soon. It will take a lot of time to actually go to reduce the taxes. right? Maybe once GST becomes the main revenue generating source for the government, at that time the government may reduce the income tax rates. But I would like to add one thing, right, about the new regime, right, whether it can be improved or not, right? As for the previous question, right? I think that's my personal opinion that if the new regime is continued, see, ultimately the old regime is going to go away. Now it's not compulsory to switch to a new regime, but ultimately it's going to be compulsory to switch to the new regime. So when it becomes compulsory, the government is actually just training the people. Okay, if you want, you can stop investing in tax saving instruments. You have your own choice. You invest anywhere which you want. So over about 5-10 years down the line, I think they will do away with the old structure, and only the new structure will be in place. So improvements to hoenge, there are going to be amendments. But the main thing is that the old structure of taxation is going to slowly be phased out, right? And then that in the only option left to you will be to go for the new scheme. So improvements obviously will be there, but the ultimate aim is to have only a one single tax structure and not dual slabs, only one slab.
Thank you, sir. So I don't think we have much time.
In fact, very frankly, Siddhant, I appreciate and congratulate. I think you should have been at my seat. The way the questions you asked and you compiled them, very good. Thank you very much. So I think we can end the question and the panel discussion. Yeah, please.
What are the loopholes for the good asset? Where I can say maximum income.
New tax regime.
No loopholes as such. I mean, there is a depending upon what, how, means in what sense you want exactly.
Business or profession earning around profits of around like 30 lakhs a year. So I just want to know like what are the loopholes to save maximum income?
No, so it has to do with the taxation planning, planning, not with the old regime or new regime.
Oh, yeah.
So basically say what kind of business you are into, then there is a section 4480 option also available to you. So on that, if you can pay tax at the rate of 6% or 8%.
Okay.
If you don't want to claim any deductions and on. So there are various schemes other than this also available. So depending upon what is your nature of business. So if I'm a professional or then also there this scheme is available, say where I can show 50% as my income and pay tax thereon. So if I'm not incurring any expenditure, say 100 rupees is my income, so I show my income is 50 rupees and on that I pay the tax. So there are various options available as far as businesses other than this new scheme and old regime. So you then explore those options.
I think the way he's asking, he has got already some loopholes found. So if you have really known it, because we know the system comes in, the hackers come in. So you frame the law and the loopholes are spotted by some people and then they are taken care of by those people. So if you know any loopholes, you can please you can tell us. They may be either plugged in or maybe done away with.
I just want to add to CA Ashish's answer that see if you what you're thinking about is saving on taxes, the new regime won't save you much taxes if you just think about it, right? See, if your income is 15 lakh rupees, exact 15 lakhs under new and old, so the maximum tax saving you can get is 75,000, right? 75,000. 15 lakhs under old regime, 15 lakhs under new regime. Compare the taxation, you'll get a 75,000 benefit in the end. So if you are in the if your profit is 30, 40, 50 lakhs, I don't think 75,000 will make a huge difference to your capital, right? So the point you are making is that for you, first as a business professional, you have only one time option to switch in and switch back, as we discussed earlier. So once you switch into the new scheme, you can only switch back once. Then you can't switch in again, right? So you have only one window to go ahead and come out. Again, you can't do it. So you have to exercise it with very much caution. But from your point of view, with profit of 30 lakhs, I don't think the new old scheme is very much relevant for you. For you, as Sir pointed out, section 4480 is the more better tax saving mechanism. Thanks. So new and old is not so relevant if 30, 40 lakhs profit is there.
Any more questions? Yes, anyone?
Or Ganatra sir or JB sir, senior most practicing CA, would you like to add
Thank
to?
It is a good coverage.
Very good. So we got a pat on the back. Thank you. Yeah.
Thank you very much, CA Vikas sir, CA Ashish sir, and CA Tanveer sir for such an enlightening session. It was an honor having you all here today. And also thank you to our moderator, CA Santosh Ghak sir, for being a great moderator. Thank you. Dear panelists, we would like to present our heartfelt gratitude towards you by giving you a small token of appreciation. And for the same, I would like to call upon my fellow co-members, Masira, Riddhi, and Anubhav.
Bit closer. Thank you.
I think at least for this.
Santosh, today you just take a vaccine.
She's already taken over.
We would also like to present our heartfelt gratitude towards our ex-professor of the accountancy department, Ghak sir. Not the ex, but the moderator.
Because we are not X yet. So far, yeah. Till 30th, we are continuing.
So please into camera.
I like it. The pattern is already taken. Very happy. So, we, the RBI talked about succession plan for bankers. We have already got a succession plan.
Because it's an alumni meet, I'll also request Fatima ma'am, Prachi and Pratishtha ma'am to give to our ex-faculty members. First of all, senior sir, Ganatra sir. Neha Shah ma'am.
Yeah, Shah might be senior to me.
So here we end the alumni meet, but the second celebration starts. That's a farewell of Ghak sir. Because our Ghak sir is retiring on 30th of September.